Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Shane Galway of Guinness Ventures to talk about the Guinness EIS Fund. Hello Shane, welcome back to the studio. So we're here to talk about the EIS Fund. Firstly, what is it, what makes it different, and why should investors consider it?
Hi Jonathan. So the Guinness EIS is our flagship EIS fund at Guinness Ventures. And we have a portfolio of 50 investee companies, and we've invested over 300 million via our Guinness EIS. We focus predominantly on scale-up businesses. So it's more the stage businesses are at rather than a specific sector. And scale-up businesses we define as businesses that have at least $1 million of revenue and are looking to grow beyond that. So the average revenue of businesses we invested in last year was around 5 million. We don't focus on a specific sector, but the areas that perhaps are our areas of expertise are business services, consumer, and healthcare. And we look at businesses from all over the UK.
And so taking a step back, Guinness Ventures, for those who aren't familiar, who are Guinness Ventures and what's your role there?
Yes, so I set up Guinness Ventures in 2010, and we are the venture capital arm of Guinness Asset Management, which was founded by Tim Guinness 22 years ago. Guinness Asset Management has 8 billion of assets under management, and flagship funds are the Guinness Global Equity Income Fund and also the Global Innovators Fund.
So what types of companies are you looking to invest in?
We look at a lot of businesses, and we see over 100 a month. The types of companies that we're looking to invest in are at that Series A stage. So they've already proved up their product, service, or technology and are looking to scale up. And within those businesses, we drill down into management teams. And we're looking for a dynamic management team that have a clear vision of the business they want to build. We look at metrics such as growth rates, barriers to entry, margins, the product market fit, and really drill into the business plan of those.
And are there particular sectors that you favour, or are you really a true generalist and you'll look at any sector?
We are generalists. We tend to specialise in three areas mentioned: business services, consumer, and healthcare. But within those, they actually span quite a few sectors. And the businesses we look at are very much tech-enabled.
So how many of these businesses can investors expect in their portfolio when they invest?
We look to have at least 10 companies in a portfolio. We close 4 tranches each year, and each of those tranches we look to have fully invested within the tax year that it closes.
So can you talk us through some examples of investments you've made in the fund recently?
Yeah, sure. So one of the businesses we invested in earlier this year is a company called Fussy, and which was founded by Matt Kennedy. And Fussy's mission is to remove single-use plastic from the bathroom. And their first product is their eco deodorant, which is completely recyclable, and they sell through all the major retailers in the UK. And it's been growing phenomenally well. It was originally backed by a couple of the dragons, so it was on Dragon's Den. When they came to us, they'd gone through 8 million of turnover at the start of this year, and they've been they're on course to at least double that this year.
Any other examples?
Yes, so another business we backed earlier this year is a company called Sportable. And Sportable's clients tend to be sports teams and leagues in the UK, Ireland, North America, and even as far afield as Australia. And they provide those teams, they track players and balls for team sports. And so a bit like Hawkeye, but for team sports. And they provide them with all sorts of data and analytics for those team managers. And they also, interestingly, provide data and graphics to TV channels. in real time while filming those sports.
Interesting. And so how do you find these investments? And I guess once you find them, how do you win these deals? Because I imagine some of these are fairly competitive investment rounds.
Yes, they are. And I think that plays to some of the strengths of Guinness. We are an established venture capital investor in the UK, and we've got a really experienced team with a strong network. And it's really that network that helps us find businesses right across the country. We have the advantage of being a well-known player, so a lot of businesses find us, but we go out and through our contacts, we get introduced to a lot of businesses. And that can be via advisors such as lawyers and accountants, corporate finance advisors, but also through founders and non-execs, and through other investors. So we've got contacts with the angel networks and venture capital networks, high net worth individuals, family offices around the UK and beyond, actually.
And to what extent do you get involved with these companies when you back them?
Yeah, so it varies from company to company, but we sit on the boards as director and observer, and we get involved as needed. There's a couple of areas really where we recognize we add value. And again, back to network, finding, looking at senior management teams, seeing where the gaps are and helping them find individuals, whether that's a chair, a non-exec director, might be a finance director or a commercial director. So being able to identify and help fill those gaps is really important. And then another area is in follow-on funding or in liquidity or a sale. So those are the sorts of things that need to be prepared for a couple of years out. And often the building blocks are the same across different businesses. It's being in touch with the right counterparties at the right time and actually planning for an exit event a couple of years out.
And I guess if you're investing at that scale-up stage, typically those businesses might all face similar problems, and therefore you should be able to help a variety of businesses.
That's absolutely right, and that there's every business is different, but there's a lot of uniting factors across those, and that's where we can help as portfolio managers.
And you mentioned follow-on funding there. So if we look at your existing portfolio, some of the more established holdings, are there any particular highlights there? Anything that's gone on to do great things? Yeah,
so I mentioned Saracare to you. I mean, Saracare is a business that has become probably the leading care in the home business in the UK. They have over 10,000 carers. They make 2 million home visits every month. And the annualized revenue is approaching 300 million. Well, when we invested, they had revenues of just 4 million. So this is a business that has grown phenomenally over the last few years. We made a small partial exit in 2021, but we continued to hold the majority of the stake in that business, and it continues to grow incredibly well.
Good. Any other examples?
Yeah, another one is a business called Abrism. Abrism's a business we invested in 2022, and it had just reached the £1 million turnover. And it was set up by 3 PhD students in Cambridge. It's based in Cambridge. And they founded the business to provide adaptive learning to enterprises to help them efficiently train their workforces. And it's a business that has really landed well with large enterprises. So it's since we invested, it's won some real key clients. BAE Systems is one, and it's won some US clients, Anthology and IC Squared. And it's approaching 3 million of revenues now, and is really beginning to make its mark in its sector.
So if we turn to exits, it's been a pretty tough couple of years for venture capital. M&A has been fairly depressed. Do you have any exits in your portfolio recently?
Yeah, well, so you're absolutely right. 21 and 22 were strong years for exits for us, and ContentCal was sold to Adobe, Pastor Evangelist to Barilla, and Imogen to Thomson Reuters, to give some examples. Since then, the market has been tough over the last couple of years, and what I think we saw was valuation expectations were quite high, and needed to come down. And what we've seen over that period is really, I think, valuation expectations are where they should be amongst founders and investors, and there's beginning to be more activity. So those conversations around exit are increasing, and I hope we'll see more in the coming months.
And turning to risk, how risky is your EIS fund? You mentioned some of these companies are generating revenue of $1 million plus, but it's still a very high risk part of the market, correct?
Yeah, that's absolutely right. And look, all EIS investments are risky. These are high growth businesses. And I think one of the things we set our store by at Guinness Ventures is we have a realistic appraisal of risk. We don't sugarcoat it. And what we do is look to mitigate it. So by focusing on the later stage businesses, filtering for businesses that have at least £1 million of turnover, we help mitigate it to some degree, but there will still be failures. And so the other way we address that is by ensuring we provide investors with a spread of investments.
And so to sum up, Shane, for those that want to back an EIS fund this year, why should they invest with Guinness?
Well, we are a established EIS fund manager. We've got a really experienced team. We've got a great network to find the best businesses. And we've got a strong and focused strategy on scale-up businesses.
Shane Gilway of Guinness Ventures, thank you very much.
Thank you, Jonathan.
If you are watching on YouTube, please press like and subscribe to the channel for more.